gold has had a remarkable run. So, I don't think initiating a large position at this point makes a whole lot of sense. I think it's remarkable that, with the strength of the dollar, you've had a simultaneous rally in gold, which is the part that has been the most surprising, right? If you had been, where gold, index was under 100 and dollar rallying, that's one thing. But we have seen the opposite happen. I think there's concern that the Federal Reserve's hands are tied to the extent that there's going to be fiscal policy that's going to be inflationary, and monetary policy may not be able to act because there remains, concerns with commercial real estate in the U.S. The job market, slack is no longer. And we're looking at, if you look behind the numbers at unemployment, you have almost 2 million people that have been long-term unemployed, which is generally not seen, at almost full employment situations at 4.1, 4.2% unemployment. So these are the concerns where the central bank will likely not, and again, I'm a big fan of Claudia Sam, so I was glad to catch some of her, discussions before this segment. And what she mentioned was that, the labor market will keep the possibility of a rate increase completely out of bounds, and that basically keeps the gold rally very much intact. Now, the question becomes, if you do actually get a growth scare, right? I don't think that's going to be the case, but let's say there is some minute level of growth scare, that's when you could see the gold trade not working out anymore, because at that point, you're looking at declining GDP, maybe resetting of expectations of corporate profits, and certainly the dollar will have to weaken along the way, bringing down yields as a result. So again, this is not the time to chase gold, given what it's done over the last year and a half, but building maybe a partial position might be okay, given the hands being tied for the Federal Reserve, at least for the next 6 months, while we're still understanding the impact of tariffs as a whole.
And you rule out profit taking. For those who are sitting on hefty gains, you rule out profit taking.
I would say so, right? I don't think the run-up is completely done, right? Especially because, like I said, if the dollar does come back down to earth, which we are hoping it would, certainly for folks that are looking to be first-time home buyers, they need the dollar to cooperate, and they need the 10-year yields to cooperate. So if we do expect some weakness on that front, you can expect gold to have still perhaps another leg up. But I don't think this entering gold trade at this juncture is not going to outsmart other market assets, if you will, because I think most of it, perhaps 70, 80% of the run is probably already done.